next section, James, Academy Trust Handbook and Managing Risk. Right, okay, James. The 2023 Academies Trust Handbook was released during the summer and it comes into force 1st of September, start of this month. Is there anything major we need to know about?
Yeah, thanks, Giles. I think the latest iteration of the handbook is really interesting in so much there seems to have been a tide change between towards reducing the regulation. So, since I started working with academies over the last decade, we've seen each iteration of the handbook sort of add extra layers of additional rules each year, making academy administration increasingly cumbersome. Last year, 2022, the enhancements seemed to be very minor, and it felt much more like a holding position. But for 2023, there are small but notable movements towards a relaxation of the guidance.
Yeah, I think tide change is a nice way of putting it. Can you say a little bit more?
Sure. Okay, so the main change is really about relaxing the rules in relation to administering related party transactions. Next slide, please, Fran. So, over the years, there have been some fairly embarrassing public scandals. You may have seen this news article in relation to the Perry Beaches Academy Trust, who was given a notice to improve in 2016, following the revelation that the chief executive was paid an additional six-figure salary through a related party arrangement. Now, on the back of these sort of embarrassing headlines, the ESFA has been steadily ratcheting up control in this area. And as things stand, the regulations are currently some of the most onerous of all of my not-for-profit clients. So, for instance, registered charities have a much simpler set of rules to follow. Now, as news stories such as Perry Beach's scandals have started to abate, it seems like the SFA are feeling comfortable to take its foot off the pedal a little bit. Now, as everyone's probably aware, one of the historic rules is that if you transact more than £20,000 with a related party, you're required to get prior ESFA approval. Now, one of the major changes is that this threshold has now doubled to £40,000. Furthermore, this threshold only applies to individual contracts, and so there's no requirements to look at the cumulative purchases that are building up from a related party.
Yeah, and that's important, isn't it? Because before it was always cumulative. Once you're over the limit, everything needed prior approval, didn't it? And now you can just look at things, transactions individually.
Absolutely. So it does help to simplify things.
Yes.
As well as the relaxation on the value of these transactions, there's also a relaxation in relation to the type of transaction that need prior approval. So purchases from schools, colleges and universities, which are the Academy's trust sponsors, and from any state-funded school or college, including other academies, no longer require prior approval. However, it is important to point out that this relaxation would not apply to a trading subsidiary of such a party. And this relaxation doesn't apply to purchases from an academy's own subsidiary either.
So just on that, the subsidiary point is because coming from fear of events like Perry Breaches, they still see as a transaction with a subsidiary. The rules still treat a transaction with a subsidiary as a movement of funds out of the sector, out of control, don't they? They still treat them as a risk.
Absolutely. Subsidiaries are a strange phenomena. They were sort of set up in the charity sector as a mechanism to kind of not pay corporation tax. And they are sort of set up in this arm's length basis, even though you kind of control them because you have all the share capital. So yeah, I think they still feel a bit nervous around that kind of arrangement. And
one would hope that would be a next stage in deregulation, would be to shift onto subs, wouldn't we?
I think it would make sense. I agree, Giles. It's also probably worth mentioning that these approval requirements don't apply to religious trusts, where they are purchasing essential functions fundamental to their religious character and ethos that can only be provided by their religious authority. So just to be clear, that doesn't sort of give them a blanket relaxation from all purchases from diocese, but just for the fundamental things you need to get in for the religious character of the school. So, other purchases would still fall within the related party rules.
Yeah, that's well, because I know we've got Diocesan Trust represented on this listening today. It's not handbrake's totally off. It's just those that narrow class of transaction. Right. Anything else that's relaxed, James?
Absolutely. Okay, so you may remember that where a contract takes the trust's cumulative annual total with a related party beyond £2,500, the element above that figure should be at no more than cost. And there's a provision in the guidance about having a contract where you can sort of go and look at their books and records and confirm that's the case. And it's sort of quite messy, really. And I'm pleased to report that that rule, again, has been removed from purchases from a college, university, or school, which is the Academy's sponsor, or again, from any other state-funded school or college. As I previously mentioned, this doesn't apply to subsidiaries, or indeed the trust's own subsidiary. All related party contracts and agreements still must be reported to the SFA in advance of commencement or renewal.
Yeah. So at that point, purchases from another Academy Trust, you no longer have the at cost requirement, which will free up a number of those transactions. But again, not all handbrakes are released. All of these things still have to be reported to ESFA in advance. Yeah. So we've got three types of requirements. We've got at cost, prior permission, reporting to ESFA, and everything still needs to be reported to ESFA. Yeah.
Spot on.
Okay. So that seems to have done related party relaxations, which we're very keen on. What else?
Okay, there are some further relaxations in the handbook, although in my view, these are less exciting. So first of all, the requirement to share the management accounts with the board 6 times a year has been removed. Although in practice, I think this is actually quite a minor concession, as the requirements to prepare management accounts and share them with the chair still remain.
And that's monthly, isn't it? That's monthly.
Yeah, absolutely. Six times a year. Yeah, sorry, you're right. The
remaining
to share with the chair is monthly. Yeah, absolutely right. As discussed by our colleagues earlier, there are also some provisions that allow trusts to set up salary sacrifice schemes for electric vehicles, which I think is quite exciting, without getting prior SFA approval. As was mentioned earlier, that the main provision here is that you ensure there is no liability falling back on the trust for non-payment. There is also no need now to report the reasons in your accounts if fewer than 6 board meetings took place in the year, but there's still a requirement to hold at least 3. That's still in place. And actually, there's been a very minor relaxation on the budget setting process, allowing an extra month to submit the annual budget forecast return.
What you haven't said, Jay, I mean, people remember last year, we put out newsletters in the spring saying we're going to get relaxation on certain finance leases, didn't we? And then it was taken out when the trust handbook was published at the end of August. How's that come in?
Yeah, absolutely. So I think we were all sort of expecting it to be released, and actually it just didn't make it to the 2023 trust handbook. This issue seems to be rumbling around for a couple of years now, and at this stage, there's no indications that the potential relaxation will make it into the next iteration.
Yeah, and I think those people who are involved in colleges, there's interesting changes. I think if you look across the colleges, you don't necessarily, you can't predict the future. Colleges have been reclassified to be more akin to a status like academies, but they don't have the finance lease problem.
Okay.
But what can we learn from this? Probably nothing. Right, but it's all pretty positive. Are we going in the right direction?
Yeah, no, it does seem like a step in the right direction, Giles. But actually, I think for many of us working in the sector, it does feel like further relaxations would be welcome. As an academy auditor, I think I often find myself having to consider activities that might feel actually quite immaterial in their nature.
Yeah, go on, give us some examples.
Okay, well, I don't want to sort of reignite old debates, Giles, but I think the SFA zero tolerance on alcohol purchases feels pretty heavy-handed. I mean, I'm not condoning that large swathes of government funding are used for lavish parties, but the odd bottle of wine as a way to show appreciation to the sector feels actually like quite a proportional purchase. Um, we've touched on it before, areas such as photocopier leases and whether they fall under the wider ban on finance leases is another area where I think the rules are disproportionate. So in short, I think it would be more efficient use of everyone's time and money if the guidance continues in this trajectory and becomes more pragmatic in a number of areas. It's also probably worth mentioning that not all the changes in the handbook were relaxations. There were also a number of clarifications as well, as highlighting areas of additional emphasis.
Okay, we need to know what these are, James.
Absolutely. Okay, it's a good question. Some of the clarifications are relatively routine. For instance, it's made clear that the accounting officer and chief financial officer shouldn't be the same person. There's also, interestingly, a gentle nudge towards implementing gag pooling, making it clear that the SFE sees that as potentially a valuable approach.
Yeah, and there's some multi-academy trusts who haven't yet considered this, so this should be of interest to them.
Yeah, absolutely. Although interestingly, the handbook still insists there should be an appeals process and that disputes over allocations can still be escalated to the SFA. And I think sort of when I speak to multi-academy trusts that I work with, a lot of them sort of feel that's a bit of a barrier. There's an anxiety if they did gag pooling, it might end up having long, protracted sort of disputes with individual schools, which just sort of slow down the whole process. So I still think maybe there's more they could do to try and smooth the way to introduce gag pooling more across the board.
Okay, so let's check. I mean, a theme of today has been around RAC.
Hmm.
What else? What's in the trust handbook is relevant to RAC?
Yeah, that's a really interesting question, Giles. If you looked at the 2022 handbook, there was a reference to good estate management for schools handbook. But in 2023, the supporting advice has proliferated to include things like condition data collection, school capital funding guidance, and interestingly, as well as the reinforced autoclave aerated concrete rack guidance.
Where perhaps the horse has bolted?
Yeah, I agree. It's interestingly, the list of areas where notice to improve may be issued has also been included. And this includes a number of governance issues, such as failing to comply with safeguarding duties or simply lacking the skills, knowledge, or experience to exercise effective oversight.
So this is one of the things that Simon said was that you have in running a school, you have a fear of an ever-growing number of compliance risks, and which encourages me as someone who designs presentations to academies that where we're talking about risk and we're talking about things compliance, but we're in an ever more turbulent environment. Do you have any advice on how trustees can we are planning to talk. You're planning to talk a bit more about risk management. I think that, yeah.
Yeah, absolutely. So I agree with you, Giles. I think, if you look at the world at the moment, we've got RAC, volatile energy prices, unrest with teaching unions, and it feels like there's a lot of risk plates spinning that trusts need to keep their eye on. And in my experience, actually, most trusts build their risk management strategy around risk registers. And risk registers have been around for a long time. They're well understood mechanisms for articulating risks and how they're being managed. And Fran, if you go to the next slide, they may look a little like this. So, I mean, this is a very sort of simplified example. There's only one risk on here, but basically, risk registers work by assigning a perceived risk a score both before and after some form of mitigating activities put in place. So in this example, we've picked up RAC. So the school said it's a major risk. It's likely to happen at the high impact. They've then gone off, got some advice from surveyors have actually said, well, no, we think the risk of it actually happening is much lower, and the score comes down accordingly.
This is, yeah, and this is a model. This is the kind of table what most of us are familiar with. It comes out of a table. It sort of ultimately derives from his guidance from the Charity Commission some years ago, doesn't it? I think this is a really interesting example because I suspect that there are schools that have RAC that probably had this on their risk registers and assessed it and thought it was all managed, and as you all know, the issue has exploded over the summer. Do you think that affected schools? Well, do you think affected schools should have done more, or should be doing more?
Yeah, I'm not professing to have been able to have foreseen the whole RAC issue. And from what I understand, the risk crystallised over the summer because in a particular school, there were some beams previously considered to be robust and they unexpectedly collapsed. Well, you can be a bit more cynical if you, I think Simon was suggesting maybe there's other things going on, but on the face of it, there was an unforeseen event which has kind of triggered this. But saying that, I do wonder whether taking a more holistic approach to risk management might have raised it on the agenda, or at least raised things like business continuity planning, which is effectively the situation these schools are now sort of facing.
Yeah, what do you mean?
Okay, so I think risk registers are the standard go-to approach, but they can be quite voluminous, so you get lots and lots of risks in there. And I think what happens very often is risk managers feel like they've absolved themselves a little bit when they escalate the matter to the board. So I think there's an emphasis to kind of score things quite highly. And so by the time trustees get to see the risk registers, there is just too many risks on there sort of to meaningfully have a discussion at board level. Another problem I often see is that maybe one or two individuals take responsibility for the risk register and they kind of are sitting a little bit in an ivory tower. And so without input from other key individuals, you kind of get this sort of rather narrow view of what the risks are.
Yeah, you and I will have been in, I'm sure you've been in meetings like I have, where there's a lot of very interesting practical operational issues, and you get towards lowish, sort of about 3/4 of the way through the agenda, and then the review of risk registers, and it's sort of brief or superficial or doesn't necessarily achieve anything. I mean, I'm just being devil's advocate here.
No, I think you're spot on, Giles. I've been in trustee meetings myself as a trustee, and I know you get towards the end of the meeting and you're suddenly faced with this matrix of risks and scores, and very often people are exhausted and they don't really give it the time and energy
And
it
so
deserves.
therefore, how do we bring it to life?
Okay, so I'm a big proponent for the idea of risk mapping as a way to better understand how risks are managed within an organization.
Yeah.
So I think to better explain this, it's important to try and explain what the 4 lines of defense are, and Fran's kind of put that up on the slide. So this idea of 4 lines of defense is a model of risk management, which basically says within any organization, you have 4 levels at which risk is managed. On the ground defences are controlled day to day at an operational level. So the assurance is coming from those who are embedded in the process. It does lack independence, but it is delivered by those who know and understand the organisation at a detailed level. Oversight then is a second layer that encompasses how the organisation oversees this process and makes sure that it's operating effectively. So this could encompass things like reviewing the risk registers, discussions at board level. Independent assurance covers activities such as internal audit. So this can look at overall effectiveness at a governance level, as well as robustness of risk management controls. And then external insurance is anything else provided by external bodies. A good example would be an external auditor. Although arguably these people are more detached from the process, they can often have useful insights on how things can be developed.
Yeah, and there's nothing like being able to see this in practice, is there? Can you show us the next slide, Fran, where we've got an example?
Yeah, so this is a really simplified example, Giles. So I think we've, the risk areas we've made very high level. But the idea here is that in the columns, we've got, a couple of first line defense controls. We've got, second, third, and fourth. And we've kind of RAG rated it as to whether, which lines of defense are offering us, high, medium, or low assurance in particular areas. So, if you were faced with a risk map that looked like this, you might look at the human resource line and say, well, crikey, there's an awful lot of red and amber there. So perhaps we need to put a bit more energy into looking around human resource. So potentially you might go to your internal auditors and say, can you do a review in this area? Similarly, if you look on this example, finance, we've got lots of red in the second line of defence. So again, that might precipitate a discussion at board level about what this means in practice and whether action was needed to boost skills or resource at this particular level.
Yeah, and I think you don't. I mean, a school or an academy doesn't have to do these themselves. I mean, they might be able to, or they just might not have time, and they can ask their internal auditors or someone else. We're currently helping an HE institution with constructing, and from our point of view, it's a fairly mechanical exercise. We're going around, we're doing the legwork, putting it together, and then when with the final product, they will then make the assessment of how well things are. Particular risks around 13 headings are being covered, so I think it's a good exercise. But the point is, it's for the purpose of the audit committee, to help them to be assured that, because not everywhere needs an internal audit, does it?
Exactly, and my perception is that the interface between internal auditors and trusts is a bit weak at the moment, and the handbook does require trustees to feed into the process. And if the internal auditors produce a map like this, or it's produced internally, I think it's a really good first step in trying to steer the best places internal audit resource needs to go.
Yeah, and yeah. Is there anything else you just want, before we wind up, you want to say on risk management, James, or do you think we've
Yeah,
covered it?
absolutely. I think we're running out of time a little bit, Charles, but I think another key thing I like to see is bringing on the ground risk managers to audit and risk committees and discuss their thoughts and concerns. Done the right way, it can be really supportive, and it starts to get this message out to the wider staff body that opening up discussions throughout the organisation and making risk a live topic. I think that things like that can really sort of articulate or help articulate what the organisation's appetite for risk is, and also a strategic approach. But the key message I get across, though, is whatever tools you use, trying to create a holistic culture of risk management is likely to be more useful than focusing heavily on the risk register.
Yeah, thank you. I think that's that's good practical advice. The number of requirements are increasing, despite the fact that we've got a tidal change that you brought out, and I think this is a good way for complicated organisations to be rethinking. Thank you.